Wall Street closes higher following the Federal Reserve Chairman Jerome Powell's comments signaling 2 more quarter-point rate cuts this year. The S&P 500 and the Dow closed at record highs. The Nasdaq also closed with gains. Stocks in the Asia-Pacific, whichever are open, have opened higher on strong cues from the US markets, even as markets in China will remain shut for a week due to a public holiday. The GIFT Nifty is signaling a flat start for the Indian markets. Crude prices declined for the third straight month, with Brent closing September at just under $72 a barrel. Gold prices too have come off their record high levels. The SEBI at its board meet yesterday expands the definition of connected persons to include partners and household sharers. A new asset class called investment strategies to bridge the gap between mutual funds and portfolio management services is also introduced, and mutual fund light framework with relaxed regulations is also launched for passive funds, along with a faster rights issue process. No measures are introduced in the F&O segment. Kotak Mahindra Bank CEO Ashok Vaswani is bullish on the bank's growth. Speaking exclusively to CNBC TV 18, he said that they will increase market share significantly by 2030 via organic and inorganic growth. He is also sanguine on the deposit growth worries. It's the Tuesday morning, the start of a new month and the last trading day before we head into a midweek holiday. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring this morning. Most of the Asian markets are closed this morning, be it South Korea, be it in mainland China after the rally that we saw yesterday, and those in South Korea as well. They are shut for trading. The Chinese markets will be shut through the week on account of a holiday, but the Japanese markets are open for trading this morning, and they are seeing a bit of a rebound after yesterday's fall. The Taiwanese index too is up 0.9% this morning, but the rebound is coming in from the Nikkei. It was down almost 4.5% in yesterday's trading session. It has recovered nearly half of those losses, currently trading with gains of close to 2%. We'll pull up the GIFT Nifty as well, and that will give you an indication of how the implied open. The 25-point uptick, so a largely flattish start with a slightly positive bias. It's a very important day for our own markets. We'll get to that in just a bit. But for now, the implied open is suggesting a start above the flat line for our own markets. And moving on to Wall Street then, where the benchmark indices ended higher. The S&P 500 closed at a fresh record high. The Dow Jones closed just above the flat line, and the tech-heavy Nasdaq also gained 0.4%. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets ended slightly higher across the major indexes Monday, capping gains for the month of September after the Federal Reserve's half-point rate cut earlier in the month. The Dow up 17 points, up nearly 2% for the month. The S&P 500 added 24, up 2% for September. And the tech-heavy Nasdaq added 69 to end the month with a 2.7% gain. Federal Reserve Chairman Jerome Powell said that the U.S. economy is in solid shape on Monday, and that the recent half-point cut in interest rates should not be interpreted as a sign that future cuts will be just as steep. Instead, the head of the central bank said that he and his colleagues will look to balance bringing down inflation with supporting the labor market, and that the data will guide future rate adjustments. DirecTV agreed on Monday to buy EchoStar's satellite television business, which includes Dish TV. The deal caps off decades of on and off talks to create one of the nation's largest pay TV distributors with a combined 20 million subscribers. It also gives AT&T an exit from the entertainment business. The company is selling its 70% stake in DirecTV to private equity firm TPG for $7.6 billion. That's what's happening here in the U.S. Back over to you in Mumbai.
Well, now, Fed Chair Jerome Powell at the National Association for Business Economics conference said that the Fed is not on any preset course. He added that if the economy continues to evolve as expected, there will be 2 more smaller rate cuts later this year. Listen to what he said.
We will do what it takes in terms of the speed with which we move. But if you look at where we were 2 weeks ago, coming up on 3 weeks ago, I guess, when we wrote down our SEPs and made our decision, it was a situation where people were thinking, the bulk of the committee was at 75 or 100 basis points, and the votes were on 50, and that would mean 2 more cuts. It wouldn't mean more 50s. Now, of course, that'll depend on the data. But ultimately, that's what the baseline is. If the economy performs as expected, then that would mean 2 more cuts this year, a total of 50 more.
That's all we have on the global market front, but how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the setup on the FNO side of things as well. But, well, it was the month of September that finally came to an end yesterday, and you can describe that month in exactly 2 halves. We had almost 21 trading sessions for the month, and you can see the first 10 sessions was almost about the Fed uncertainty. What will the Fed do? Will it cut rates or not? And once it became clear that the Fed will do what it eventually did, it was a one-way move upside on the index, and towards the second half of the session, the Nifty was up almost 2%. But if you exclude yesterday's fall until Friday's closing, the Nifty was up almost 3.5% for the month of September, and it was a positive month nonetheless. And despite yesterday's fall, we still ended the month with gains of almost 2%. But what led to that fall yesterday? Now, there were some concerns with regards to the SEBI board meeting, where there's some measures with regards to the FNO space that may be announced. That was a concern. That did not happen. So that is one concern that has been allayed. The Chinese markets, the way they rallied yesterday, both the CSI 300 and the Shenzhen index together saw almost a record turnover in yesterday's trading session. So there were some fears of money moving into China from India, and of course the sell-off in the index heavyweights. Now, if Reliance Industries falls 3.5% in a day, you would expect that kind of a fall, and that will show up in the contributors as well. Take a look at this: Reliance, ICICI Bank, HDFC Bank, Axis Bank, all the banking heavyweights that took the index higher pulled the index down in yesterday's trading session. And the principal culprit was the Nifty Bank, and it has had a painful last couple of sessions, has the Nifty Bank. Now, in fact, from the highs that it made last Thursday, the index is down almost 1,500 points from those levels, and it will be interesting to see that how the Nifty Bank moves in today's session, because it is going to be the weekly expiry today for the Nifty Bank and for the financial services, considering tomorrow is a holiday. It's a very data heavy day today. The September auto sales will also be coming out in today's session, the manufacturing PMI, of course the revision that the transaction fees were made on BSE, NSE, MCX, even CDSL, all of that will take effect in today's session. So that is another important cue to watch out for in today's session. And of course the quarterly business updates will begin. In fact, they have already begun, with IREDA coming out with an update last night, and of course the final phase of polling in Jammu and Kashmir. So a lot of cues to watch out for in today's trading session. For now, the GIFT Nifty pointing towards a flat start, just start above the flat line for our own markets. But what should be the stocks that should be watching out for this morning? Vinny is joining in with that list. Vinny, good morning.
Good morning, and we'll start with Tata Power, because they've received and they've actually inked an MOU, Memorandum of Understanding, with the Rajasthan government for around 1.2 lakh crore rupees. This is for power distribution, transmission, and renewable energy transmission as well. So keeping an eye on this one. This is an investment plan that they have, 1.2 lakh crores. So keep an eye on that. NHPC, that too has signed an MOU with the government of Rajasthan. This is for a proposed investment of 50,000 crores. This is for pump storage projects, renewable energy projects, as well as battery energy storage project. Unichem Labs, that's the one we're keeping an eye out on, after the board has approved entering into an agreement with Bayshaw Pharmaceuticals LLC USA. Bayshaw USA is a step-down subsidiary of Ipca Labs, so keep an eye out on that. This agreement is to buy all the rights, titles and interest in the product approvals of 9 ANDAs for around $2.65 million. NTPC, too in focus, after NTPC Green has signed an MOU with Rajasthan government for development of 25 gigawatt of renewable projects. Whereas Rajasthan government has inked a lot of packs in just yesterday's post-market session. IREDA, on the back of business update, we are keeping an eye on that. September quarter, loan sanctioned saw a growth of around 300%, while loan disbursement also saw a growth of 56% on a year-on-year basis. And lastly, Kalpataru Projects, they have secured an order of around 1,241 crores in the Indian as well as overseas market.
Vinny, thanks a lot for that update. Plenty of stocks, of course, auto stocks to watch out for as well. And lastly, Mangalam joins in with cues from the FNO space. Mangalam, good morning. A bit of a distorted session yesterday. How are the setup looking like on the FNO side now?
Well, you know, a lot of excesses were taken out in yesterday's trading session, and that's perhaps a good thing. It'll be very interesting to see how it pans out in today's trading session, largely because, one, there was a sharp fall yesterday on the Nifty. The Nifty Bank having corrected nearly 1,500 points from the top. The mid-cap index outperformed a bit in the sense that it did not fall as much as the other frontline indices. The GIFT Nifty is now suggesting a mildly positive start to open. And today will also be the test of the texture of the market, largely because if one's theory was yesterday's fall was on account of China's outperformance, today we have China, which is shut on account of a public holiday. So we'll keep an eye out on that one. Importantly, the cash market flows. That should come up for you. Nearly 10,000 crores sold by the FIs in yesterday's trading session. Remember, the first 29 days of September, they went ahead and bought nearly 20,000 crores. So in one trading session itself, they've sold half of that. So that'll be very interesting. And also after buying for a fair amount in index futures, they went ahead and sold about 1,700 crores in index futures, where they unbound about 24,000 long contracts. No problems because their long exposure still is 81%. Importantly, who bought the FII selling? It was the clients. Remember, yesterday we said the FIIs were long and the clients were short. Yesterday, clients covered 64,000 short contracts. And add to that, their net exposure has also moved towards the long side. From nearly 2.5 lakh net short contracts, they moved to around 2 lakh net short contracts. And the long positioning has increased from 34% to 37%. So that's a positive. What are the options that you're looking at? 26,000 call continues to be a bit of a writing, favorite for all the writers, largely because yesterday we broke below that level. There was a lot of short covering in those puts as well. But the active put is 25,600 put with a premium of almost 38, telling you closer to 25,550, we will see support. And that ties into the 20-day exponential moving average as well, which is close to around 25,565. For the Nifty Bank, it's just about 200 points away from here. So those are a couple of levels that we'll be watching out for, 20-day exponential moving average. And for the Nifty Bank, it will also be important to track the expiry today because tomorrow is a public holiday. So Fin Nifty and Nifty Bank expiries will play out. A bunch of stocks entered F&O band yesterday, part of which were Balrampur Chini, Bandhan Bank, Hind Copper and RBL Bank. All of them will be in focus today.
Some important levels to watch out for. It's an important day for the markets. Mangalam, thanks a lot for that. Time for a short break. Up next, to get you excerpts from our exclusive interview with Kotak Mahindra Bank CEO Ashok Vaswani. Stay tuned. Back on the other side. Welcome back. Now, the SEBI at its board meet yesterday expanded the definition of connected persons to include partners and household sharers when it comes to insider trading. And a new asset class called investment strategies to bridge the gap between mutual funds and portfolio management services has also been introduced to counter unregistered schemes and provide flexible regulated options for investors with a minimum investment of 10 lakh rupees per investor. An MF Lite framework with relaxed regulations is also launched for passive funds to reduce compliance and foster innovation. The regulator has also made the rights issue process smoother with a completion timeline of 23 days. Now, however, no measures were introduced in the F&O segment, which was one of the most anticipated points from this SEBI board meeting. So nothing on the F&O space as of now. On to a CNBC TV 18 exclusive then. Managing Director and CEO of Kotak Mahindra Bank, Ashok Vaswani, says that they are engaging with the Reserve Bank of India almost every week in an effort to lift restrictions. He also reiterated that slowing deposit rates need not be worrying.
Best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the day, for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress. It's not unusual for deposits to drop off in the first quarter because you normally end March on a pretty high. Frankly, I've worked in the US, I've worked in the UK, and deposits have pretty much stayed flat as a percentage of GDP and continued to grow all over the years, right? And there, obviously, the participation in the capital markets is much, much, much higher than in India. So this notion that suddenly, there's going to be a complete dearth of deposits and everybody's going to invest in the capital markets,
Overdone?
I think it's overdone, right? And I think that, look, as long as there's an economy, as long as there's expenditure, as long as there's businesses, deposits will continue to kind of go. Is the customer becoming more sophisticated and savvy? Absolutely. And that's bound to happen, right? But I don't see this situation as suddenly deposits are going to suddenly disappear.
Ashok Vaswani there, the MD and CEO of Kotak Mahindra Bank. Time for a short break. Up next, we get your cues from the commodity space. Stay tuned. Back on the other side. Back with us here on Power Breakfast, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. It seems to be a quarter to remember for the gold prices.
Oh, yes, it does. It is the best quarter in 8 years, where we have seen $2,685 an ounce of an all-time being hit as well. But since then, October has started, the first day that is, on a slightly weaker note. Well, we have seen some profit-taking coming in. The prices also are looking at expectations while of further rate cuts from the U.S. Fed and China adding monetary policy stimulus as well. But this is plain simple profit-taking because of the prices getting overheated. It has been since October 2023 that we haven't seen a major big correction coming for the gold prices. And even now, as we have seen the prices come off its highs, most of the analysts and experts are calling it as a buy on dips, because the longer term view still seems positive. We still are looking at a global debt and a government borrowing at a record of 315 trillion. And markets do believe that till the time this goes on, till the time this is at these record highs, buying gold would be perhaps the only solution there. Well, if you look at the other commodities, then metals have had a good month of September and a good quarter as well. But what has seen a decline has been the crude oil prices, declining for a third straight month in the month of September, down 9%. And it has been the largest monthly decline since 2022. Prices also have declined by 17% for this quarter. So if you bar crude oil prices, most of the other commodities really have done well for the month and for the quarter.
Manisha, thanks a lot for that update. Moving on then, India's core sector did badly in August, with output declining by 1.8%. The government fiscal data shows that government capex also did not pick up. The RBI also released the current account data for the June quarter. Lata is here to put all of that data into perspective. Lata, good morning.
Well, end of quarter always means a lot of macro data, and some of this has not been very flattering. Certainly not flattering to growth. And that in particular starts with the core sector data. The 8 core sectors, coal, electricity, cement, crude oil, gas, that set has declined, contracted by 1.8%, which is a bit shocking. We have seen low growth, but we have not seen a minus 1.8 in a long time. And the big sectors that fell or contracted were coal, crude oil, natural gas, cement, and electricity. Now, what's common to all this? They don't do very well in heavy rains. And that's exactly what has perhaps led to this contraction. Year ago, August was a month of poor rains, whereas the August 2024 has been a La Nina August, leading to very heavy rains. Perhaps that explains the lower output in perhaps all infrastructure-related sectors. It was only steel that has shown a slight growth, a low single-digit growth. Let's come to government capex. It's likely that that's also suffered for the same reasons. The overall fiscal deficit is lower compared to year-ago levels in August and in April-August, but that's because expenditure has been lower. Tax collections, and that's a bit surprising. Overall tax collections have grown 11.7%. In the past many years, it has been contributed by a very strong growth in income tax collections, but that in August has actually fallen by 25%. It's not very alarming because it's always the September, the June, those are the months when advance taxes are paid, that it's really important. But nevertheless, this is a bad sign. We have to watch it. Government capex has fallen by 30% year on year if you took April, August. That would be bad because in the election months, the government didn't spend. But you would expect August itself to have been better. August also was 20% lower than year ago August. So clearly, it's probably the rains, but government capex is not catching up as much as we wanted to. Finally, let me come to the current account data which come in, which is the pleasant set of numbers. Current account deficit is marginally higher at 1.1%. Q4, I'm talking about the April, May, June quarter. It's a very lagged data. Q4 of last year was a surplus. But you should compare year on year. If you compare year on year, last year was 1% current account deficit as a percentage of GDP. This time it is 1.1. Not a very big difference at all. It's a very good number, actually. If you're below 2%, it's a very good current account deficit. And this slightly higher current account deficit is because trade deficit is higher. Merchandise trade deficit. Services is a surplus, but it has not grown as much as it has grown in previous years. The other point is the capital flows. In the capital flows, last year we had a surplus of about 24 billion flowing in. Good FPI, good FDI, good ECBs, all that in 23. 24, all that is negative. FPI is negative. FDI flows have been very weak, and ECBs raised by Indian corporates also very weak. Not too much capex perhaps, and that's led to a lower balance of payment surplus. None of this is earth-shattering. It just means that liquidity in the system was less. But otherwise, nothing to complain about the external data.
Nothing to complain about. Lata, thanks a lot for that. But that is a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call up next to set you up for today's session.